Thank you so much. Please, people there, come in. Come in. You're still on time. Actually a great pleasure to be here. So yeah, thanks for coming, and thanks for giving me the opportunity to talk about this. For me, this is actually fairly new as well. I embarked on this piece of work like a year ago with preparations, and then we actually started with this work earlier this year. So it's great to sort of present this work in progress. I'm sure you all care about animals, but just to make sure you're in the right session, if you can raise your hand if you have a bank account. Okay, I think everyone has a bank account. That's good. So that you made sure you're in the right session and you don't need to be in one of the two others. Um, okay, so my presentation, I will very briefly explain what the issue is, what opportunity the issue provides. Then I'll focus on a particular case we've been working on this year in the Netherlands. And then I'd like to share some thoughts about the way forward. Okay, so what is the issue? This is financed. And this is financed. And this is financed. And basically all animal exploitation is financed. It's financed by banks, by asset managers, by pension funds, by insurers. And to make this more concrete, let's have two examples. One, McDonald's, biggest fast food company in the world. Over the past 5 years, financial institutions, banks, provided them with loans and underwritings of a value of more than 26 billion US dollars. And investors invested in bonds and shares in this one company for a whopping 93 billion US dollars. We are talking about big money. And if you look at the banks, you see there is a whole bunch of them. A lot of the banks from the US, but not necessarily so. Even the biggest bank in terms of loans is actually from Japan. But you also see France, United Kingdom, Italy, Australia, Canada, and the Netherlands, and we'll come to that later. If you look at the shares, that's even much more money, and you see there's a whole range of shareholders. The biggest shareholders are like the world's biggest asset managers, BlackRock and Vanguard. But even their share is only 10-12% in the whole company. Again, big money. If you look at from the other side, if you have a specific financial institution, in this case, the Dutch bank, Rabobank, it looks differently, obviously. From our tiny country, money flows all over the world to very big companies in the meat production chain. Either to big producers like Tyson Foods and Smithfield and GBS and BRF and New Hope Group, or to big retailers or big fast food chains. And so this one Dutch bank has borrowed money or made money available to these big corporations for, you can see it here. Oh, sorry. Wrong button. Almost 7 billion euros. So this is a big problem, right? This is really what keeps the industry going and expanding. So then, what is the opportunity in all this? Basically, the situation is this. There is animal activism on the one hand, and there is this big industry that is financed by all kinds of financial institutions on the other side. But what if we could shift these financial institutions to the other side? It may well be that that would tip the scales. It may well be that we would end up here. So that is the sort of premise of what we've been working on in the Netherlands this year. And the first thing that you then would ask is, why would financial institutions care in the first place? Why could they be turned to our side? How could they be pushed into also care about animals? Now, there's different reasons for that. First is that you should ask the question, whose money are we talking about? And in fact, that's my money, that's your money, that is our collective money. So we are either customers of banks or insuring companies, or we are participants in pension funds. It's one way or the other. It's our money that's being invested in this large industrial scale animal suffering. In other words, we have consumer power. And if we can organize that power, that will be a very important driver for these financial institutions to change their policy, to change their behaviors. Second reason why financial institutions could care is because it's being more and more something they are expected to. I'm not sure if you're all familiar with the OECD, but that is a sort of collaboration of the economic developed world. They have their headquarters in Paris, and they have made guidelines for multinational enterprises to install responsible behavior by companies. And that includes the financial sector. And so the OECD is expecting from companies, and states that are part of the OECD should promote that, are actually obliged to promote these guidelines. They expect from companies that they do their due diligence, that they look at societal risks, and that they manage them. And so there is, in this case, there's guidance for institutional investors to actually apply these guidelines into their day-to-day business. We have a problem with the OECD guidelines for multinational enterprises because animal welfare is not part of that. I sort of half-heartedly tried to change that last time when the multinational guidelines were reviewed and updated, and I failed. I had the support of the Dutch government, but that was not enough. And in the end, the Dutch government exchanged animal welfare with because the US didn't want to hear about it, exchanged it with another important issue about gender. And so at least I had the satisfaction that I sort of provided a bargaining chip to get that into the guidelines. But there is a new review, new update coming up, presumably in 2021, and it will be important to have animal welfare included in there. And there is a good case now, because this is the guidance for the the institutional investors. There's also guidance for companies working in the agricultural supply chain, and animal welfare is actually part of that. And that is also a good tool, I think, to use when you're dealing with food businesses. There is this OECD guidance. It requires more or less from companies that they treat animal welfare like they treat human rights and environmental issues. And obviously, this is part of what is called soft law. So companies are not by law required to do this, but the experience with soft law is that it sort of hardens over time and can make a real impact. So that's the second reason why financial institutions should be open to at least consider including concerns about animal welfare. Lastly, it might make good business sense. And so we can showcase how markets are developing, and we can showcase that it's risky actually to invest in things like battery cages. They might end up with what is called stranded assets. And that is a very topical thing in the environmental debate, where you have these big, gigantic fossil fuel companies like Exxon and Shell, who own these reserves of fossil fuels. But now, because of the Paris Agreement, they will not be allowed to extract that from the earth, because that would violate the agreement. And that means that all the money they spend in acquiring those reserves are becoming worthless. And so this is a big, big business risk. But you could imagine that exactly the same happens for battery cages, which have a lifespan of like 20, 25 years maybe. So if you're now investing in battery cages as a company, but the world goes cage-free in 7 to 10 years' time, the write-off period of your battery cages will be halved, and that is a serious business risk. So there is also, in conversations with financial institutions, it's always good to point this out, because this is the way they think, this is sort of their language. The US is a very good example. Not that long ago, only 5% of the laying hens were cage-free, and now with all the commitments that have been happening in the US over the last 5 years, maybe slightly longer, the expectation is, or the commitment is already in place, that in 2026, at least 65% of the laying hens will be cage-free, and if there's more commitments coming in, that percentage will even grow. So it's actually indeed a forceful argument to showcase that financial institutions should be forward-looking, should be very aware of trends in animal production, and that they should be ahead of the game instead of lagging behind. With that said, I'd like to zoom in on our specific case in the Netherlands, which involved all three major banks, but is particularly pertinent for Rabobank. You may not know, but Rabobank is the biggest agricultural investment bank in the world. So they have a lot of clout. And the first thing when we sort of sat down and we thought, okay, this is actually a very interesting angle, we had to ask ourselves what we would ask Rabobank. And this is our ask. First of all, we would like Rabobank to strengthen their animal welfare policy. They already have an animal welfare policy. There's some good things in there. There's some things lacking. But it really needs to be strengthened, and especially it needs to be made much more smart than it is. So we put a list of things that we ask from them, including the US-EU broiler ask, the cage-free laying hens ask, group housing of sows, and well, the list is actually pretty long. Secondly, we would like Rabobank to engage with their clients. And this is important. So we are not asking to divest. We are not saying, please bank, withdraw your money from all these horrible companies. We're not saying that, because if they would withdraw, they would lose their influence on that company. And there is a lot of money going around in this world, and these big companies would have no problem to find other finance that doesn't ask nasty questions. So we actually would like companies to be financed by Rabobank, but that Rabobank uses its leverage towards these companies because of the amount of monies they borrow to these companies, to have serious talks with them, to make plans to transition towards, for example, the US or EU broiler standard. And then if after 2, 3, maybe 4 years, this company does not move, yes, then it's time to withdraw and to make a fuss about that, because that's important then too. But this is, I think, important also in our dealings with the financial institutions, because this is the way they like to go about things. And so we had to be mindful of that. Okay, so what did we do? What steps have we taken the past year? First of all, we joined the Eerlijke Bankwijzer, the Fair Finance Guide, the Fair Bank Guide in the Netherlands. And you may have not heard about this, but there is in the Netherlands, but also in 8 other countries, including in Sweden and Norway and Belgium and France and Germany, but also in Brazil, Indonesia, Japan. There are so-called fair bank guides or fair finance guides that rate the policies of these banks on a series of societal issues. It was actually founded in the Netherlands. It's a collective of big NGOs, Oxfam, Amnesty, Friends of the Earth, the Netherlands. Also the trade unions are part of it. And so every 1 or 2 years, we review all the policies that the banks and also the insurers have, and there is a whole methodology to rate their position, and then that's published, and consumers can see, okay, I care about human rights, I can see that my bank is doing shit about that. I send them a message that I really am not amused by that, or even I change my bank to a bank that does perform much better on human rights. Same for animal welfare, but only in the Netherlands. So all the other 8 fair finance guides in the countries that I just mentioned, they look at human rights, they look at the environment, but not to animal welfare yet. So if you're from one of those countries, and if you're interested in this, please join your national fair finance guide and make sure that animal welfare is part of that. Because actually, in our fair finance guide, animal welfare is one of the hot issues. So if we see the engagement of the public, animal welfare ranks in like the sort of top 3 topics that we address. So this was good. Our joining this guide was good for our profile, for showing that we were serious about this issue, and so that meant that it was very easy for us to keep in contact with the banks, to have meetings with the banks. So that is the second thing we did. We met with them. We explained what the issues were, and then we followed up with extensive written input, so that they were fully aware of what our position was, why, and why we asked it, etc. Then we commissioned a financial report, because we did not exactly, we knew Rabobank was big in agriculture, but we did not knew exactly where their money was going to. So we commissioned a report that identified the financial flows towards like the top 30 global companies in the meat supply chain, and we published that, which created quite a bit of media attention that Rabobank didn't really particularly liked, because they did not do very well in these media reports. And we followed up by mobilizing our Facebook channels, by storytelling. So we actually went to the US to showcase where Dutch money is going to, because for a lot of consumers, it's very abstract. Okay, there is money going, I don't know where. So to make that real, to make that alive, we went to the farms that are in the supply chain that Rabobank finances. We talked to people on the ground to hear their stories about not only the cruelty, but also the stench and all the other issues that they are confronted with because of these chicken farms in this case. We joined a great protest by the Humane League in Chicago, and we told that that is actually concerning Dutch consumers because their money is used in the US to do all these horrible things. So that, I think, helped in making people aware what it actually means to have a bank account. We followed also up with an email petition towards the banks in which 35,000 people joined, and that we handed that over to Rabobank. And we had results quite soon. Already, we launched basically in February. In April, we already got results. Rabobank updated their sustainability framework, including their animal welfare policy, and they made real progress. So in that policy, it's now stated that Rabobank commits to strongly encourage all of its clients to have transitioned to cage-free housing systems for laying hens and group housing systems for sows by 2025, globally, so also in China. They committed to not taking on any new clients involved in dolphinaria, and Rabobank will help existing clients to transition their business, if and when possible. They don't take on new clients globally in the fur industries or expanding existing relationships with clients involved in fur activities. No trade and manufacturing of Angora wool. Encouragement of adopting best practices, including for broilers, according to the EU-US broiler ask, to have a maximum of 30 kilograms animal per square meter. So these are actually getting very concrete, smart objectives within Rabobank's policy. So we can now hold Rabobank accountable for these, and we can this year and next year and all the years coming, I will go back to them every year saying, okay, you've committed to this, what have you done? And that's good. I also strongly encourage them to engage with some of these big companies, especially in the US, especially with Tyson Foods and McDonald's. And this is a bit problematic in the sense that they are sort of hiding behind client confidentiality. So they will not tell me if they indeed engage with these companies or what they have discussed with them. And so there is also a big transparency issue here at stake. And I'm not convinced yet that they are engaging. I do think that they are more open to it, definitely. But we need to see. So what's next is that we need to continue to push for strengthening their animal welfare policy and to really, really comply to our broiler ask, for example, being more specific about pigs and enrichment, many other things. And we need really to see that Rabobank is engaging with its clients to push those clients to move upwards. And yeah, this will be interesting to see how this transparency thing will pan out. I think there is a broad sort of movement towards much more transparency. Technology enables us to have much more transparency. So I think banks will, in the end, need to cave in on this, but I don't know about timeframes. Okay, then thoughts moving forward. I think the journey we've had this year clearly illustrates that indeed the financial sector provides a complementary and potentially quite powerful entry point to create additional pressure on the stakeholders that we would like to change. But it's also good to be aware about the place we are starting from, because there's also opportunity costs involved. If you're taking on this kind of work, it will absorb your time, it will absorb a lot of your resources, and you may need to balance that with alternative actions you could have taken. In the Netherlands, we are in a sort of luxury position that there's many groups working on factory farm issues. So there's no real added value for me to do the same, to also directly target McDonald's and directly target KFC, because there's a great group doing that amazingly, and I can never even dream to surpass that. But in many other countries, that luxury position is not there, and it might well be that the first thing you need to do is directly target your supermarket. So this is not a plea for us all to jump on the financial sector. Please be aware where your time and money could be most effective. However, I do, and it makes sense, right? If you can change a supermarket directly, why sort of would you make the detour around a financial institution to change your supermarket? But if the supermarket cannot be changed directly, and this sort of seems to hold true for these very gigantic companies like Tyson Foods, like McDonald's on broilers, like KFC. If we're as a movement are not able to change them directly, I think the additional route of the financial sector is actually very promising. And I was extremely encouraged just like 2 weeks ago with this news. The McDonald's comes under fire from New York pension funds. So the New York State pension funds publicly sort of criticized McDonald's about the welfare of the chickens in their supply chain. And this is work from HSUS, so I'm very grateful that they did this. But I think exactly this is very powerful. And if other investors in McDonald's will follow this example, you may end in a situation that, for example, a resolution on their annual general meeting will get more and more votes, and in the end, the company will need to change because of the pressure of their investors. But there is a long way to go, and I think we can learn a lot from the environmental movements, who have been extremely active on financial institutions over the last years. Mainly, I think, targeting banks and pension funds. And you see that banks and pension funds indeed now do all kinds of stuff to at least appear to be more climate friendly. But very recently, I think also in the last 1.5 week, this initiative started. Some very big US-based groups, including the Shira Club, are now targeting BlackRock which is the biggest asset manager in the world. They manage assets with a value of like more than 6 trillion US dollars. And so basically this one company is the biggest, has the biggest impact on climate change of all the companies that we know of, because they heavily invest in all the fossil fuel companies. And I could imagine, it's sort of my dream, that we could do the same with animal welfare. If you look at the energy transition we are now in, and last week the new IPCC report was ever more so grim in a sense that we really need to step up our game if we like to curb climate change. But that is a hot issue in the financial sector. Financial institutions, they sort of try to account for the carbon footprint of their investment portfolio, and they have key performance indicators to bring the share of fossil fuels down in their investment portfolio. There is this big divestment movement of all companies that say, no, we're not investing in fossil fuels at all anymore. And there is this enormous expanding market in so-called green bonds. And bonds are basically, if a company would like to borrow money and there is no one person or institution that can borrow that money, the loan is cut in all kinds of little pieces, and you can, that's called a bond, and you can borrow a little money to that company. And so the financial sector has jumped on this and has made green bonds, so investments in what they think are environmentally friendly projects. So you can buy a green bond for, let's say, wind energy or solar energy. And then you can have a tax, you pay less tax. So there is a financial incentive also to deal in these green bonds. Now, if that is the case, how cool would it be if we can move towards a space that financial institutions actually do protein accounting for their investment portfolio? That they see, okay, we need to not just have an energy transition, but we need to have a protein transition. And that indeed, at some point, not at this point again, but at some point, divestment in animal proteins is actually something that financial institutions should consider. And then you could imagine that we can also have green animal welfare bonds, so loans of projects that really encourage much higher animal welfare standards, and that these are recognized by the financial institutions, that they can have tax benefits, and that there is a growing market to actually grow this higher welfare market. So these are very sort of dreams of me towards the future. What does that mean for you? Well, probably at this point in time, not so much. However, I really would like to conclude before taking on questions, that you start looking at your own finance, start asking your own bank questions about where your money is going to, that you start questioning your insurers, where they invest your money into, that you as a participant in a pension fund can go to your pension fund and say, hey, you are taking care of my money, and I want that money to be invested responsibly, and so not in these gigantic industrial factories. So that is my sort of first message. Secondly, maybe the financial angle provides also sort of tactical means, because as a person or as a group, you can also buy shares of these companies, and you can then go to the annual general meetings and you can ask questions during that meeting. And it may not change immediately something, so it might be that it's a frustrating experience at first, but it's a way to create media attention, for example, to create first step in awareness. And maybe you find people there that actually care about animals too, and that think, hey, that's a good idea. And maybe there are like pension funds that are interested in doing that. And so maybe the next year it's not you just saying, hey, what are you doing? But maybe a pension fund will raise that question, and maybe then a resolution will be tabled, and investors are required to think about it and to vote either yes or no. And if they vote against it, they need to be able to explain that to their customers and to their participants. So yeah, I'd like to sort of plant this little seed. And we will see. I think, again, I think there's big potential, but also please be aware of opportunity costs. Thank you.
Thank you for a very interesting presentation. And does anybody have questions?
Hi, thank you. I'm not really sure, but didn't Rabobank already publish some suggestions on plant-based protein investments?
They do.
Yeah. Okay.
Yes.
Yeah.
So this is also an interesting development. We have in the Netherlands what's called a Green Protein Alliance. It's driven by Jeroen Willemsen, who is a great guy trying to push this. And he has an agenda, not unlike the 50 by 40 agenda, and he managed to make Rabobank part of that. Yeah, but that is the sort of funny thing about the times we live in. Like Tyson Foods also invests in alternatives for meat. Yeah.
Hi, thank you for the interesting talk. I would have one question. Sometimes banks and financial institutions are just intermediaries and are selling some general financial products to customers, people, normal people who invest in them. And that may be different funds like mutual funds, index funds, equity funds, and so on. And is there a possibility or an initiative how to figure out which funds are probably more eco-friendly or don't invest in economic activities that would be harmful? Are such initiatives possible or even underway?
So I think there's a lot of these initiatives out there, but they concern the environment, or they may concern like social. Our issue is a social issue, but what they perceive as being a social issue. So there is not, to my knowledge, and not yet something out there that is really taking animal welfare into account. So we need to create that. And that will be important. But indeed, a lot of these financial institutions, they invest for their own account, but they also invest for the accounts of others. And then they come back to us and say, well, it's their money, and we just invested it according to their wishes. So we cannot really do anything with that. But we say no. If you're responsible, you will set the sort of boundaries of what you're prepared to do and not. So if someone is asking you to invest in controversial weapons, for example, you as a financial institution should be saying, no, we're not doing that. And if you would like to invest your money in controversial weapons, you need to go to someone else. And the same should be true for animal welfare. So if there is a client with a lot of money and goes to an asset manager and say, "Hi, I'd like to invest in conventional broiler production," in the end, the financial institution should be able to say, "If you like that, we're not your guy." Yeah.
And is it possible to somehow analyze the funds? Because some funds, like index funds, they have 100 companies inside them,
Yes.
like in a bundle, and
Right.
from time to time, based on some benchmarks, the companies are changed.
Yeah.
So I, as an investor,
Yeah.
have a really hard time because
to track
to
yeah.
track it,
Yeah.
because usually you have to invest in a fund for 7 and 10 years.
Right.
And the portfolio of companies changes like every year.
Exactly.
So I have
Yeah.
no idea what companies are there. And the second problem is, if there would be some company which I have an issue with, I would lose money if I take out
Yeah.
the
Yeah,
money.
sure,
So
sure,
so
sure.
this is,
Yeah.
I think, quite a hard problem to solve.
It is a hard problem to solve, and so the answer should be in the policy. So if we have good policies in place, and indeed the fund manager tries to change the basket of companies within that particular fund, he should be looking at the companies he would like to put in. If they comply to the policy, yes, then they can be put in. If they do not comply to the policy, they can't. That is the place we need to arrive. But we are far from that situation yet. So it's important that we step up our game to get there. Yeah. But it's a very valid point. It also reminds me that one of the difficulties we face is that the responsibility is sort of dissolved, because a pension fund, for example, would like to spread its risks and would rather invest in like 10,000 different companies than just in 5 or 10. And that means that if they are investing in one of those 10,000 companies and we flag, hey, this is a bad company and you need to engage, they say, well, there's so many issues. We have 10,000 companies, we cannot do everything, so sorry. And then our influence is just marginal, because we invest only like 0.05% of its, we have only 0.05% of its shares, so our leverage is negligible. And so this is a problem we face, and this is a problem we need to solve. That they cannot hide behind this way of dealing, because that would mean that no one is responsible. So then if they choose that as a strategy, they should engage with other pension funds that are putting money in the same company, and join forces and make a coalition and divide tasks, saying, okay, on behalf of our coalition of, let's say, 50 pension funds, you are going to engage with this company, I will engage with that company, you are going to engage with company number 3, so that collectively they take that responsibility seriously.
Anybody else? Yeah.
I was thinking, since on an individual level, I mean, we don't have that much money, most of us, to just go buy stocks. Could it be easier if we created NGOs specifically on this focus? I don't know what your idea is on that, how easy that is.
Well, it can be done, for sure. Yeah, I mean, there is, for example, there is a organization, Bank Track, that works at European level. That's actually, also based in the Netherlands. They are just focusing on climate change. But you could well imagine that some sort of, that kind of organization following the financial sector on animal welfare would be actually very valuable. Since I'm working here, I have, so this year I've made many contacts with groups, and we are already sort of plotting some actions. So more on that later. It's still in its infancy, so won't share anything yet. But there's stuff upcoming, and maybe indeed we need to make a separate organization out of that. Yeah.
Yeah, I believe also there are separate organizations operating on export credit agencies.
Yes.
As well, because, you know, I'm from Humane Society International, we also work on international finance.
And so I work with you
Yeah,
guys.
so we
Yes.
work with them as well. You know, focusing on the World Bank, on development banks. So there's actually a huge range of financial institutions that can be worked on.
Yeah.
And there's some of us working on in collaboration.
Yeah, and so it's good that you mentioned this, Joe, because if you look at the World Bank and the European Bank for Development and Reconstruction, the money, especially the EBDR, is the money that they're providing is not as profound as the numbers you've seen here. However, they are like the first ones joining in. So, for example, in Ukraine, a couple of years ago, there was this poultry company wanting to expand. Private banks were very hesitant to go in there. And then the EBDR went in, and that was a sort of stamp of approval, sort of approved by the EU, by the states, because in the end they are responsible. And then the private banks massively jumped on that too. So it's like the first mover, and if we can change the policies of the World Bank and the EBDR, that would make a lot of difference. Yeah, good point. Yeah.
I need the mic. I don't know if you have Folio in Europe, but they did partner with Humane Society to develop social exclusion causes, specifically about animal welfare. So they are one bank that does look at some of it. It looks like they specifically prohibit certain restaurants and other QSRs that have really egregious practices. Mm-hmm. So that might be one to look at, but I don't know if it's available.
Okay. Yeah, I'll definitely look into that. Yeah. So and so this brings me back to the question: should we divest or not? And so my take on it is that for example, fur or foie gras or shark finning or whatever, yes, we should divest immediately. Better yesterday than today. But in terms of the meat industry, because it's so omnipresent and so powerful and will remain powerful for the foreseeable future, I think divestment at this point in time is not a good strategy because we would lose our leverage. That's very great. Yeah, please do, because indeed there are some certain requirements to have indeed a voting right, and that can differ a little bit from here and there. So it's important that you have the right stocks at the right time. Yeah. Okay. I think I will not stand in between you and your lunch anymore. So thank you so much.